Hey guys, good afternoon. It's Vinod from GrowWealth. Hope you are all well. Today is the 8th of May, 2022. Happy Mother's Day to all our mothers in our membership group. Let's have a look at the stock market analysis and the weekly watch list update. You might be wondering what's the watch list? Because the last week we said all the previous watch lists that we had is off the table because the market is in a bear market. And all of the stocks that we were watching had broken down, and it is not worth kind of keeping those stocks on your watch list anymore. The purpose of having a watch list is to have these stocks that is trending, where it might give you reasonable entry points for a trade setup. The previous watch list, when the market turned, the sector rotation happened, has become null and void. It was void, so it wasn't useful. However, I did mention a couple of stocks, Shell and also SLL. Both of them are in the oil and gas sector. We'll have a look at how they've done. I've also identified a few other stocks for us to keep in our watch list going forward. As usual, just a reminder that these watch lists are just that, a list of stocks to watch. It doesn't necessarily mean that you have the right entry setup immediately. It is up to you to use your trading setup, strategies, good risk reward framework and risk management setup for you to then come up with what is your trade plan for whatever stocks that you want to trade. Use this as an educational video and a good resource to learn and put your knowledge into practice and to cross-check sound as a sounding board. But this isn't a buy or sell advice, as you would know. Without further ado, let's have a look at how the market had done. As usual, we will start with the CPC, that's the put call ratio index on a weekly. So I have this kind of green line and the red line to show the bearish and bullish kind of cutoff. So anything beyond 1.1 on the higher side would indicate that there's a lot of people are leaning towards a bear market or for market to go down further. And when everyone, because this is a contrarian indicator, when everyone is bearish, then that's likely to create a short bounce at the very least, or could indicate an intermediate bottom. And the reverse is true if the reading is below 80, which means everyone is leaning bullish, which means it could indicate intermediate short-term top, and that could be a reversal. And this week it went up to 1.22 and then kind of reversed back into this range of 1.1 to 0.8. So it is in the neutral zone at the moment, which means in the current trend of bear market, it's likely to continue without a further reversal to the upside. S&P 500, most of the indices that we are going to share, particularly the US stock indices, have similar setup, which is a bad market setup. I have tidied this graph a little bit to include just the weekly 30-week moving average. As you might remember from my last weekly blog post, that I'm trialing and learning more about Stan Weinstein's stage analysis method, where he uses the 30-week moving average, simple moving average. So that's what I'm including here. And I think it's particularly in bear market, it's a good indicator to learn and to screen stocks with in order to identify when it reverses, when it sets a bottom eventually, we will be able to identify stocks in early stages of stage 2 or when it breaks out of stage 1 into stage 2 in order to capture that uptrend in advance. So I'm kind of practicing my eye and going through the stock screening using this 30-week moving average. And for our purpose of weekly watch list, I think it's a good reminder to have a zoomed out kind of broader helicopter view of how the market is doing with a clean chart. So for now, we are going with the 30-week moving average. You can use the other traditional indicators that I tend to use. I still use it for trading, which are 8, 21, and 50-week or time period moving exponential moving average. But I'm trialing this for now to familiarize with the stage analysis method. So coming back to the S&P 500, it has broken the May 2021 level, the support level. It's retested a couple of times here and then broke down here. It's now on its route to February 2021. And it's not too far from there. And I wouldn't be surprised if it hits next week. And beyond that, we are looking at the August 2020 high. NASDAQ is more weaker than the S&P 500, where it has already came and almost tested the August 2020 high in the last week. And if the weak market continues, then we are looking at pre-COVID high of February 2020 high, all the way down to this level. So this is the QQQ, which is the NASDAQ 100 ETF. NYSE, which is the New York Stock Exchange Composite Index, is not doing that bad, but it's still within the stage 4 of the 4-stage analysis mentioned by Stan Weinstein. It's not as weak as the NASDAQ, certainly, and not as much as the S&P 500, partly because the NYSE index has oil and gas sectored companies in it. So it's kind of holding up a little bit. And the same could be said for Dow Jones Index, which looks pretty similar to the NYSE. And it's about 10-12% off its previous all-time high, whereas NASDAQ is about 25-28%, and S&P 500 is just under 20% drop from the all-time high. But nonetheless, all of these 4 indices are in stage 4. This is the ETF on Russell 2000, and it has been in stage 4 for a while, since January, when it broke below this correction level, the support level. It retested, failed, and it broke that bear flag setup, and it's continuing its downtrend. And the next logical support is around the January to February 2020 high, which also coincides with this gap up. And it's not going to be surprising for me if it comes lower and retests that gap or fills that gap in Russell 2000. Going forward, I thought I will include the UK index as well, which is the FTSE 100, and UKX, the chart that you're looking at, is representation of the FTSE 100. This has a lot of dividend heavyweight stocks, defensive names like utilities, and also oil and gas sector in it. And that is probably why you notice that this index is above its weekly 30 moving average. So it is not in stage 4, unlike the US counterparts. If it breaks below, goes sideways and breaks down, then it would. But as it stands now, it is sitting at the 30-week moving average, and it hasn't convincingly broken down. It did here, but regained in 30-week within a matter of a couple of weeks. So it'll be interesting to see if this holds and has a breakout beyond this level, or it further kind of collapses, going from stage 2 to stage 3 and 4 subsequently, following its US counterpart. But right now, it is not in stage 4. Bitcoin, not doing very good. It has been kind of piggybacking and then correlating with the US stock index like S&P 500 and NASDAQ. And it is now going into the stage 4 chart pattern. So it's not looking good. We had a support level. We have a support level between $30,000 and $33,000 mark for Bitcoin versus USD. And the current price is $34,450. The way the the Bitcoin is acting with increasing distribution volume coming up consistently over the last many weeks. So if you can see here, so we sold out of in our portfolio, as you know, using the dual MACD strategy right about here. And it's gone down further $10,000 after we had that exit signal. It looks like it's likely to retest this support. And there are some predictions in the market that it could go even lower. But right now, it's just above that intermediate term support. If the market collapses, Bitcoin is likely to go down with it as well. There is not much of panic selling yet. No capitulation selling happened yet. the rally day that we had in NASDAQ. Let's go back to NASDAQ here on the daily. So we had a rally day here, high volume recovery of more than 1.5%. But then soon after, that rally day low has been breached. So that doesn't count anymore. So this rally day and follow-through day concepts are highlighted by William O'Neill in the IBD principles. So we don't have a rally day now because it's been breached. We need another rally day and a follow-through day and subsequent kind of follow-through action. But until then, it is in clear downtrend. All right, so we spoke in our previous forums in the last week analysis about the oil and gas, particularly the two stocks. So Shell is what you see on the screen. The weekly chart, it is in nice stage 2 uptrend since it broke out of this level and also filled this gap down here or there. Came and retested that gap down level and breakout level, which is above the 30-week moving average, and that acts as a support here, and it's continuing its uptrend nicely. So let me add this bottom indicator, which is the Mansfield relative strength indicator. I color-coded it to have it a little bit more visible. So as you can see, when it broke out here, that's when the relative strength also came from red to green area. And then the line here moving above the 0 level mark. For more information, go and refer to Stan Weinstein's book. It's a wonderful book. It's a bit of an old print, but it has rich information on stage analysis. If there are much interest, I'm more than happy to do a training video on that going forward. The other stock I spoke about last time was SLL. So this SLL is in the XETR, that's the German index, but it's primarily based in Vienna Stock Exchange. So that will be SBO is the ticker there. So because there was a consolidation there for a good 6 weeks, 6+ weeks and breakout, and due to the MACD strategy, this was a good setup, and it is continuing to go up along with the other oil and gas sector names last week as well. The volume is coming down, which is not great, but the stock pattern is in the stage 2 uptrend. And this will be replicated in many of the oil and gas sector name or energy sector name, as you can see now. The next stock here is VTNR. So it has had a nice uptrend all the way from $0.6 to $14 within a matter of 8 months, 7-8 months. And then it retraced from 14 to 3.3. That's quite a bit of a drop, but it's now creating this big, massive cup and handle and trying to break out of that. It is also showing the relative strength and is above the 30-week moving average. So that is a reasonable setup. But you might notice that in all of this oil and gas sector name, because it's been running hugely for a long time now, they are all extended. It doesn't give you an automatic good entry setup looking at the weekly. You may have to go to a lower time frame to see if it fits your trading setup for a nice risk reward entry point. I'm highlighting these stocks here to show these are the stocks that's doing well in the sector, and to keep it in your watch list to see if it provides any good setup for your trade setup structures. Okay, the next one is SOI, that's Solaris Oilfield Infrastructure. So I got whipsawed here. So I was looking for this bull flag breakout right there, but then it broke below and it kind of shook me out here. And then had a really strong volume up week of 9% last week after checking me out. So I don't have the stock, but it still is maintaining this uptrend. So this is what is likely to happen. If we try to buy an extended stock, we can't have 30%, 40% stop loss. It is meaningless. So you would have to go really tightly. And when you do that, you're at risk of being whipsawed, as I was in this situation. But nonetheless, if you zoom out, let me take this off. So if you zoom out, it is trying to kind of continue its uptrend and high volume coming up now. moving on. The next one is Livent Corp, LTHM. So last week, it gained over 30% on high volume, and it's back into kind of relative strength, monthly relative strength above zero, and the price is above 30-week moving average. Why did that happen in just 1 week? That's because of a positive earnings reaction. So wonderful revenue and earnings story, and it gapped up on that single day over 30% on 4th of May. And although it gapped up, it didn't give back much at all, 1.5 the next day, 0.36 the following day, considering Thursday and Friday last week was one of the worst days of last week's trading. This stock has held those gains after the earnings really well, and that shows incredible relative strength in the current market condition. And hence, I think it's worth including in our watch list. It's yo-yoing up and down the 30-week moving average, and that tends to happen when a stock is in stage 3 of its price action. It did a little bit here, and then it broke out into uptrend, but then it's continuing. So if you look at it, it's not that far away from where it was a year ago. So you'd want to see a further volume-based further up move in order to confirm that it's getting into another stage 2. If not, it's likely that it gets dragged down with the rest of the bear market weight and can get into stage 4 as well. So something to watch. But so far, since earnings, it is showing incredible relative strength. Similar chart here for Albemarle Corporation as well. Go to the daily, as you can see, earnings on the 4th May, same date as LTHM. Positive strong move, 9%, and then gapped up another 9% the following day, and another 2.5% on Friday. So it's not just one trick pony. It's not just gapping up on one day after the earnings, but it is kind of following that through with 2 consecutive days of high volume price increases. So it shows buyers are coming into the stocks, into the stock, and as a result, it has now closed above the 30-week moving average on high volume with relative strength. Again, just this on its own is not enough as an entry signal. You'd want to kind of look at other parameters to see if it fits where you want to enter and where you want to put your stop loss. Because if you just go with the weekly, this is a 25, nearly 26% candle, weekly candle, and that is not a good stop loss level if you go just with the weekly, and hence you would have to go with lower time scale if you're thinking of entering the stock. But nonetheless, strong price action and follow through in this very big stock market condition. So that is worth noticing and adding to your watch list. NTR, certain mineral names, fertilizer names are still holding up a little bit. So it is in the stage 2 uptrend, slight pullback, but still above the 30-week moving average. If you look at the daily, it's kind of pulled back and finding some resistance around 108 level mark. So you'd want to see if this holds and resets another base here, allowing the 30-week moving average to catch up and resumes its uptrend, or gets pulled back with the rest of the market going down. But nonetheless, it is in the uptrend. And we can't say that for many of those stocks in the current market conditions. So any stock in the uptrend and showing relative strength is worthy to be in your watch list. NTR is one of them. Similarly, AMR as well. Like SOI, I got a bit whipsawed on this stock as well. So let me make it a little bit bigger. So going with the daily, there was this nice ascending triangle breakout here, but then it soon failed and giving a false breakout setup. Took me out here. It shook me out, and then it reset itself using this 30-day moving average, or it also coincided with the 50-day EMA as well here, and resumed its uptrend. So if you look at the weekly with using the 30-week moving average, it is a nice, smooth stage 2 uptrend. And you could have stayed on it, provided you bought it here, whereas I only kind of screened and came to know about the stock right there, which is a little bit extended. So I went with a tighter stop loss. That's a risk of being whipsawed, which is what happened to me. But nonetheless, this stock is still in the uptrend, showing relative strength, closed at all-time high price. Not many stocks are doing that in the current market condition. High volume and good relative strength, and as you can see here. So one for your watch list, surely. And I want to finish with a commodity, which is wheat. So this is the ETF that trades on the wheat price. And quite interestingly, they named it as wheat without a H for its ticker symbol, WEAT. So if you look at the daily, let me add in the other indicators, moving averages. So this is the daily chart. When the war broke out in Ukraine, I think Ukraine has a lot of wheat production there, and it was suspected that it will impact on the global supply of wheat. So it jumped from, so this is the day I think the war broke out, somewhere on the end of February, from $0.83 all the way to $1.5 within a matter of a week. It then pulled back. It ran up too fast, and then it pulled back to the 50-day EMA, and is setting up a nice bull flag setup, triangle pattern breakout on Friday. And this is why it caught my attention. Okay, so the week is setting up. If you have access to trade the commodities, this is something that you may want to consider. There are also ETF on wheat that we can trade. WEAT is one of them. There are some leveraged ETFs as well. Inherently, that is more riskier than non-leveraged products. I won't cover that here, but wheat seems to be kind of setting up a nice bull flag pattern, waiting for further breakout and resuming its previous uptrend. So there you go. These are the watch list stocks and ETF I'm looking at going forward for the next week. But don't forget, all of the major US indices are in stage 4 downtrend. It will likely to continue its bear market downtrend further. It's up one day 4%, down the next 5%, and that is not a conducive market to trade any swing trading or position trading setup at all. Cash is a position, so make sure you save and have tight stop loss for any of the trading stocks that you have, trading positions that you have, so that you don't leave the small losses into bigger losses. And when the market sets itself up into a base and a bottoming process, and when it breaks out, you will have those cash and the mental capital to get back into the market. And of course, GrowWealth and I will be here to guide you through that process, but don't exhaust your financial capital and mental capital in the process of trying to predict the bottom, trying to buy the dip, and that is likely to be a very costly mistake. So don't do that. Be very selective in what you trade. Have a watch list. That doesn't mean you have to trade every week. Some of the kind of tidied up the watch list this week to give you a much more clear idea of where the market is. So play it safe. I hope it was useful. I'll see you in the next video next week. Happy learning and successful investing. Bye-bye.